Hi everyone, welcome to this time scrolling finance. While last week was a catastrophe to China's bonds market, the sentiment was a little bearish. The yields of long and ultra long-term bonds went up so much, and it caught everyone completely off guard. Long sides of bonds lost tons of profits. So as always, let's have a quick review of the bonds market, then check out details part. Alright? Total bond yields curve was steeper than the week before. Yields of 3, 5, 10, and 30 years terms went up 1, 0.2, 4, and 7 basis points. If we compare to the one of December 9th last year, the curve kept twisted. Yields of 3, 5, and 30 years terms went up 11, 3, and 7 basis points. Yields of 10 years term went down 5 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds enlarged, with 3-year spread was 56 basis points. About actions of investment agencies in last week for short and middle-term bonds, big banks and policy banks bought 54 billion yuan together. City commercial banks and joint stock banks sold 115 billion yuan together. And for long and ultra-long-term bonds, funds bought 22 billion yuan, whereas city commercial banks and securities companies sold 29 billion yuan together. Next, let's check out details part and see what happened last week. In terms of fundamentals, first, the inflation data came out. CPI and PPI were minus 0.4% and minus 2.9%. While CPI was as weak as expected and PPI showed some resilience. The anti-convolution policy kept driving the economy through supply side as always. Then we saw PPI has been increasing for 4 months. But the CPI still hungers for strong demand policies. So I hope we can ignite another engine of that plan as soon as possible, okay? Second, the financial data. For the credit part, the household loans was total 30 billion yuan, way too weak compared to the same period of last year, and the loans to enterprises and public institutions changed not much. The willingness of residents to borrow money was still weak. For the financing part, net financing of government bonds was the pillar for this part as always, and net financing of corporate bonds decreased compared to both the last month and the same period of last year. We need to figure out some ways to stimulate the financing demand from private firms. For the deposit part, household deposits increased less than deposits of non-bank financial institutions year on year. We can infer that people continue to invest in China's stocks market, causing the stocks market to perform strong consecutively. Talking all, the economic situation was okay, and the brilliant performance of the stocks market may last for a while. So from long and ultra-long-term view, the whole bonds market didn't turn bearish, but long-term bonds still face high chance of losing money. The best way to deal with it may be leaving alone. For funding conditions, the total volume was tight during the first several days last week, but turned to loose after that. The PBOC total invested 196 billion yuan liquidity in the bonds market, and resumed a 6 billion yuan reverse repurchase operation. So the PBOC cares China's bonds market as always. Thus, from short and middle-term view, the shorter the duration of the bond is, the safer the bond is. Then, what should we pay attention next? The first has to be the performance of China's stocks market, which has dominated actions and sentiments of the capital market for almost 2 months. Second, the move from household deposits to deposits of non-banking financial institutions, which influences the funding conditions and the performance of the stocks market. Third, it's been said that the PBOC may resume treasury bonds purchasing in the near future. It can be a good sign for the bonds market to turn to positive. About bond investment strategies, well, at least the fundamentals doesn't stay against the bonds market, but now people prefer stocks. So long and ultra-long-term bonds are easy to lose money. We have to control our portfolio's duration. Buying some short-term bonds is a good idea. The funding condition is loose, and the PBOC may give us a big surprise in the future. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding, experience, and waiting for you. So bye guys, until next time.